Good morning, everybody. Thank you for joining us. We are IOOGO, and thank you to Capital Factory for hosting us here this morning. Just want to go ahead and introduce ourselves. I'm Christy Albietto. I'm the COO of IOOGO. I'm a tax accountant and bring with me over 15 years of experience, also in the tech industry. And with us today, we have Josh Albietto, our CEO. He is also a tax accountant and enrolled agent.
Yeah, hey everyone! Thank you for being here today. We're starting to do this once a month, and the whole idea of this is not just to talk about tax season, and accounting and taxes during January through April, right? The idea is to talk about it every month because this is an integral part of our operations. As startup founders, as business owners, as CEOs, we have to understand and we have to know, how our financials are doing. Or, if you're just starting out and you have no revenue, you have no expenses or anything of that nature, then you have to start thinking about one of the main components of that it's never going to go away. It's always going to be there.
Yep. Thank you, Josh. And before we go any further, I do want to bring up the fact that this is a live webinar, and the benefits of having a live webinar is that you can ask questions at any time. We'll give you some time at the end to ask questions, but please definitely, as we're going through things, ask those questions while they're relevant, and we'll be happy to stop and address those questions at that time. Okay, so a little bit about us and why we're here talking to you about tax and accounting is we do offer a variety of solutions, from tax preparation, tax planning, obviously accounting, R&D tax credit, which we'll get into later. And central to all that is we built this technology that allows our team of tax professionals, accountants, CFOs, enrolled agents, anything based on what you need for your tax or accounting needs. We have a team that can help you with that. And they're using our technology that allows them to be a lot more efficient, so that you get the benefit of still having the personalization of someone helping you, but you get the speed of technology, so that you can get all of your issues addressed quickly, because after all, you're building a business, so you need things to move fast when you're growing your business.
So one of the interesting things that we see with a lot of our companies is that we can get to see them grow. And for some of you who have been working with us since 2018, you have seen our evolution. And we started as just a simple tax and accounting tech software, and primarily doing bookkeeping. And then as things got more interesting, we were able to grow into this today, right? And we're able to leverage, as Christy said, the power of technology, so that our accountants and our tax pros can deal with the day-to-day, in a much more efficient way. But now our CFOs, right? So we are bringing in very experienced individuals in the startup and in the finance industry that begin to help some of our startup companies think about the future of their company and not just about how do I get ready for taxes, right? So I think that's something extremely excited that you're going to hear us talk about more and more and more and more, because at first, one of the things, and let's be honest, right? One of the first things that we don't think about, that's really important is the financials, right, of our company. And we think about having, raising capital. We think about, having enough money to get our product, out to market, to generate revenue. But we don't think, about the process of tax and accounting, because it's boring, right? Because nobody has time for that, right? But now we have been able to offer the assistance to a lot of startups, from accounting tax perspective, getting ready, being able to see what's happening, you know, in the market, being able to take all of these credits, you know, and all these loans and all of these financial benefits that the government threw our way over the past, you know, few months. And now let's talk about the future in the long term of your company through the CFO programs, right? So I think that's something extremely interesting that you know you're going to hear us talk about more and more.
Yep. Thank you, Josh.
Mhm.
So we want to also tell you about some of our clients that we service, and this is just a few of them to give you an idea of the wide breadth of industries that we support. So, and some of these you'll recognize from the Capital Factory family, like Simbri and Weddy and RoboAmp. But we deal a lot with technology companies. That's probably our number one. But we also work with e-commerce. We work with influencer marketing. We work with corporate lawyers. We work with even in the engineering industry. Anything you want to add with our clients, Josh?
So I think that anywhere, whether you're raising capital or you're not raising capital, you know, I think, you know, this is why, you know, my dad says this, right? You know, we're in the best business. Why? Because it doesn't matter, you know, what you're doing, who your customer is, you're always, you know, there's always a need for what you do. And that's right. You know, whether our customers are doing AI or VR, or, you know, they're doing, you know, cryptocurrency, you know, law, traditional business, or, you know, new cutting edge technology, it all comes down to the one specific need, which is tax and accounting, right? So, and I think this is where we have been able to help a lot of the startups, you know, in not just in Capital Factory, but also, you know, throughout, you know, all 50 states. It's marrying technology with the experience of a CPA, a tax pro, a tax planner, and now a CFO. So, yeah, very happy to mention some of these cool names. Jones Kurtz, of course, you know, being, you know, such a good tool to, you know, or a good resource, right, to have as an accounting, as an attorney, right, and as a law firm for young startups or any startup of any size.
Yep, agreed. He's a great partner to have. So a little bit about what we're going to talk about today to make sure that you're prepared for your business when it comes to tax and accounting is we're going to start out talking about what you need to know for taxes or for accounting, for looking at tax perspective. When do you engage that support of a tax professional or accountant? What do you need to consider as you hire employees when it comes to payroll taxes, as you make money for income taxes? And then how do you offset that tax liability with credits and deductions? And then finally, at the end, we'll leave you with some good resources so that you have what you need to take the next steps.
Yeah, so there's a lot that we can talk about when it comes to tax and accounting, but let's start with the basics because everybody needs to know the basics, right? The one thing you got to understand is tax and accounting it's not that hard when you're starting out. Building the habit, understanding that you need to know basic accounting is probably the hardest thing. And I am an accountant. I have been in this business for 20 some years now. And, you know, I went through the same thing. It's a different thing being an accountant and then being the owner of an accounting business, right? So, the CEO of an accounting business. So, you know, there's all of these components all of these things that I want to do, and all of a sudden, tax and accounting, transactions, and all these other things, you know, start taking a back seat because sales are important, customers are important, right? Raising capital is important, right? But the need for any business owner, right? I'm not going to call you a founder. I'm not going to call you a CEO right now. I'm going to call you a business owner. You are a business owner, right? You're a small business owner right now, you know, and the need for you to understand basic accounting is there, and basic habits, build those basic habits. Christy will walk us through this later, but there will be a point where you hand this thing off completely to someone, right? But for the time being, if you are in the infancy stage of your business, you need to know the basics. What are those basics? Number one, bank account and records. You need to stop using your personal bank account as the business bank account, right? You need to or the other way around, building those habits, because you don't have anyone checking on you. You don't have anyone reviewing your information. It's easy to just say, hey, I'm going to pay, for this personal thing with my business, or I'm going to, pay for this business thing with my personal credit card. And then you start losing track of all these transactions. And then come the end of the year, you don't know what's what, So let's be honest. Whenever you are in your first years of operation, especially if you have not raised any capital or you don't have any transactions going on, or any revenue transactions going on, your accounting is going to be as simple as keeping record of all of your transactions. And you can do that on a piece of paper. You can do that on Excel. You can do it on QuickBooks, but you have to do it, right? And with that in mind, you also need to understand what the tax deadlines are, because if you don't have revenue, or you don't have any employees or anything like that, you still have some reporting to do, especially if you are a Delaware corporation, if you are a Texas corporation, if you're a Texas LLC. There's still reporting to do, even though you don't have taxes to pay for the company, right? So it's important to start thinking about, I need to build these habits, right? So this first slide is about understanding what those habits are, and what are those basic things that I need to know that will get me to the next level, right? So here at IOOGO, we don't only work with tax and accounting. That's not all we do. So, sometimes we go into the business coaching as well, and we start talking about, what are those steps that you need to get, that you need to take, to get you to the next step, to the next level? What are those things that investors are looking for? What are those things that the lenders are looking for? And you'll see that most of it will end up at the end of the year, in your tax return and part of your accounting. So it all makes sense, right? So as a founder, going back to calling you a founder, as a CEO of a startup company, it is your responsibility to stay on top of your stock records. If you're raising capital, if you're not raising capital, you still need to stay on top of those records. I always tell people, use Carta, use Excel, use whatever you're going to use, whatever is within your budget. Most of the software is within budget now. But you have to pay attention to that. Remember, you are the CEO of the company. You are trying to raise capital. You're trying to put your product in the market, or maybe you are in the market already and you're trying to increase or generate revenue. And the reality is that you are the guy wearing all the hats, right? You are the chief everything officer right now. And you need to pay attention to these things, right? We all do it. That's differences, between a successful CEO, successful entrepreneur, is that you will divide your time in the important things, for the growth of your company, right? So it takes me to reporting. And then, I want to talk about two simple reports here. One of them being the profit and loss statement. When you start out, most of us, when you start out, you're going to have losses. All you do is loss. You have no revenue yet, right? And if you do have revenue, it's not covering all the expenses, right? So you're going to have losses. It's okay, right? But you have to track those losses, right? A profit and loss statement for a company in its infancy stage is very simple. How much money did it come in? How much money did you spend? Where did you spend that money? And what's the end result? Typically a loss, right? So when you go to investors and you start talking about how much you spend in this and that and the other, boom, you can clearly say, hey, this is how much I've spent over the past 3 months on this, that, and the other, right? It's very, very, very important for a founder to who's going to investors, who's going to lenders, to say, hey, I know where I'm spending the money. I know exactly what I need. I know exactly where I'm going with this. I know how revenue's coming in. I know the streams of revenue, and you'll feel more confident, going into investor meetings, you feel more confident making decisions about your company once you know your numbers. The other report that I want to show you, and
Josh, I want to add something right here too. Also, the profit and loss report is one of those reports that the SBA was requiring for the second round of the economic injury disaster loan.
Very true.
So if you don't have this report ready and you need that money, then that's a delay on you being able to get access to those funds because you don't have your historical P&Ls ready to go to send to them.
Very, very true. So we all grew up thinking accounting is just so hard, and only Josh and other CPAs and other people in the industry can do it. No, it's the hardest part. And I tell you this as an accountant, as a financial individual, the hardest part is just building the habit. It's when you're solo, when you're by yourself, is saying, hey, I have to spend 20 minutes, this week, maybe this month, I got to spend 20 minutes and I got to sit down and I got to organize everything, right? I'm going to use technology to help me, right? Nowadays, I can use QuickBooks and take a picture of the receipt, and it'll populate all the information for me. It's building the habit, right? So remember that this reports, especially now with the power of technology, right? These reports are built by categorization of transactions. So how much you spend in advertising, how much you spend in development, how much you spend in hosting, how much you spend in all of these other things, right? So, and then the report will begin to create itself. Here's one report that you're going to see as your company begins to mature, which is the balance sheet, right? And the balance sheet is, it's an amazing report because it tells you not just how much sales are coming in or how much you're spending. It tells you how much assets how much the business has in assets. It also says how much the business has in liabilities. So basically, in layman's terms, how much the business owns, in general, and how much does the business owe, right? And a lot of us will carry our investors shares, right, and notes in the balance sheet. And this is something where you are going to need, and my recommendation, right, I don't, it's, you are going to be, to need the assistance, of a professional to build a proper balance sheet that you can turn into your investors and to your lenders, and begin to build that general overall idea of what the business is worth. So it's a very important document, report, that if I tell you something, if I advise you on something right now, if I give you an idea right now, is don't do it yourself, right? This is something that, if it has to be, all of these reports need to be created under what's called GAAP guidelines. The profit and loss report is very easy to create, right? But you still have to follow GAAP guidelines, right? And the following reports are actually a little more complex. And what does GAAP means? You mean, generally accepted accounting principles. Well, who knows that? Do you know that? No, you are not an accountant. We know that, and this is where we can help, right? So, cash flow statement keeps you honest. That's the way I look at it, right? It will keep me honest, right? Because cash comes in different ways to the company. Cash comes from sales. Cash can come in the way of a loan from the SBA. Cash can come from investment, right? So to understand how the cash is coming in and how much cash we have and projection of cash for the future is extremely important. And this is where you're going to need the assistance of someone, right? And I'm very careful to say this, right? We're not here to sell you anything. We're here to give you a lot of recommendations. You are the business owner. You are the CEO. You make your decisions. But at the same time, we've seen many, many times where, I'm going to try to save $50 here, and I'm going to create a $5,000 problem there, right? Just because it's what I always tell Christy, right? It's like if I go into, and if I go into the development, right, our development team, and I say, hey, let me take over, right? It wouldn't work out because that's not my forte. I understand it, but it's not what I do, right? So same with you as an accountant or as a founder. You want to make sure that when it comes to tax, when it comes to financial, when it comes to accounting, when it comes to law, that you are at least at a very minimum consulting with someone that can point you in the right direction. In the last report, it's the burn rate, especially if, when you're in the first few years of your business, and your business it's not generating any profit. Your business is only generating, you're burning through cash, right? then it's important for you to understand, right, what that rate is and how quickly you're burning through that cash, because it tells you how much money the business will need for it to stay alive, right? So very simple reports. I like to explain it as simple as possible, but basic stuff that you need to know if you are in business for the first, second year, and you are wanting to raise capital, get a loan, bootstrap it for the rest of your life. Whatever you want to do, you need to know these basic points.
So Josh has talked a lot about, when do you engage the support of somebody? How long do you do it by yourself, and when do you seek the help of a professional? And it's important that in the beginning you really look at doing it yourself, because you need to know your own numbers. You need to understand how everything works. What Josh hasn't said that he usually does is to know your numbers is to know your business. So the beginning is the prime time. Things are really simple. It's usually just a few expenses, maybe no revenue yet or little revenue, but you get to at least understand the mechanics of it, so that then later, when it is time to start engaging somebody, you can hold them accountable for what they're telling you. You can question them on what they're telling you. So you do get to a point where you look at kind of a 50-50 split, where you're still very much engaged in it, but you have someone else helping support, doing the legwork of the categorization, making sure that's done correctly. But you're very much still a kind of a partnership there. And then eventually your business is going to really boom and take off, and you're not going to have the time to be as focused on the mechanics of your accounting as you once were. And then you've got an accounting firm that's taking care of that for you. And so that's where every business owner I know strives to be.
So a couple of things that I want to add, if I can. One is, you stole my line.
Sorry.
If you if you don't know your numbers, you don't know your business. Simple as that. Your investors are going to tell you that, right? What is one of the best ways to make an investor disinterested, if for lack of a better terms, is not knowing your numbers. When you start winging it, when you start guessing, when you start saying, oh well, 30% this, 80% there, I don't know, right? So this is, people want to know what they're investing, right? $1 million is a number. Well, I want to know your numbers, right? It's people want to know what they're investing in, and you need to understand that, right? So we like to coach and teach a lot of founders. So if you are a founder who find yourself with very little cash, very little money, no money, and you want to know more on how to do this, reach out to us. Typically, most people won't put their questions here. What they do is they reach out after they watch it on YouTube, and then a week later, they'll reach out to us. So if you are a founder who say, hey, I can't afford an accountant right now, but I still need to talk to someone, schedule a call with one of us, right? After the meeting, or whenever you see this, IOOGO, you go to IOOGO, or you can reach out to us via Slack, and we have that program right now where we're helping a lot of our founders understand the process, right? Of accounting. And we're basically, you'll sit down with one of our accountants, and, they'll go through, your business and help you out, and give you advice and give you, pointers, right, on tips that what you need to do. And it's not going to cost any money, right? It's just a conversation, right? It's just, this is what you should do, and what you shouldn't do. Right now, if you want to engage us for work, that's different, right? But I also want to clarify, right? I'm not going to be your accountant. I have a team now. We have a team now of accountants who are very, very experienced, a team of tax pros and a team of tax planners. Well, what's the difference, right? CPAs don't do tax planning, right? Most of them don't do tax planning, right? Most tax pros, they deal with the IRS, directly with the IRS, which a lot of accountants, CPAs don't have time to do, right? So in tax planners, right, we're going to talk about, how we can help you save money on taxes legally, right? And you need to understand, right, that, your legal team, your accounting team, extremely important for, the growth of your business, right? So to Chris's point, right, this is a very good progression, right? Do it yourself. Your accountant, whoever your accountant's going to be, whether it's me or someone else, whoever your accountant is going to be, is not a magician, right? We cannot create profits out of nowhere. We cannot build reports without transaction history. We cannot do anything without you. So you continue to be the most essential piece for this equation.
Yep. So talking also about growing your business, you're going to start bringing on either employees or contractors. And it's important to know the implications of payroll taxes when you do start thinking about bringing people onto your team. So you really have to look at the pros and cons of hiring an employee versus a contractor. It is common in the beginning to hire contractors because you don't have to pay their payroll taxes, but there are other implications when you call someone a contractor, but you don't treat them as a contractor. So with an employee, when you pay them a salary, there is a portion of that salary that you have to take out on their behalf for FICA taxes and send it to the IRS. Well, as an employer, you also have to pay that same amount in FICA taxes in addition to their salary and also send it to the IRS. As a contractor, they are responsible for sending both portions of those FICA taxes to the IRS, which is why self-employed individuals usually see higher taxes, is because they're paying both the employee and the employer part. So as an employer, it is important to know that in addition to what you agree to pay somebody in salary, there are additional taxes that you pay on top of that. There's also, as an employee, you have to pay unemployment taxes both to the IRS and at the state level. So at the federal level, at the end of the year, usually you're going to let the IRS know how many employees you had, how much you paid them, and then there's a calculation to say, all right, this is to cover any unemployment for them should they leave your company. And then at the state level, it's also the same process of letting them know who you've hired, what you've paid them, and you're actually going to let them know on a quarterly basis what your employee pool looks like. And then it's important to know that with payroll taxes that you're having to, on a quarterly basis, you need to be filing a Form 941 that tells the IRS who you are, how many employees you had. You don't even have to tell them who your employees are, how much you paid them, how much you withheld from their paycheck for both their FICA taxes, which is their Medicare and Social Security, and their federal withholding. And hopefully your accounting team, your payroll team, or you have been depositing that money into an account that you've created with the IRS. And this form is just telling them, hey, this is what it should look like for the quarter that just passed. So this is a quarterly report, which means that January, February, March, quarter one, at the end of quarter one, you have to file this report by the 30th day of the next month. So April 30th was the deadline. That was just last week for reporting it for a Q1, and it continues every quarter like that.
I think, Christy, one clarification to make is that not hopefully you've been making the deposits.
Yeah.
You have to make the deposits as how, with the frequency that they will establish for you. When I mean they, I'm talking about the IRS, right? So there's no hoping with the IRS, right? You either do it or you don't, and then that, has an outcome, right? So if, the report it's due, on a quarterly basis, but the money is due in the frequency that they tell you, depending on the size of your business. It could be weekly, monthly, or, at a very minimum quarterly, but it's very rare that the IRS is going to say, send me the money quarterly. They're going to want that money most of the time on a monthly basis. And then you file the report. It's basically saying, hey, here's a report of everything that I've already sent you.
Okay. Yes, thank you for clarifying. Yes, you should be, not hopefully, you should be depositing that money at the interval that the IRS has determined. And then finally, 940 is as I was talking about earlier, the unemployment tax report that you have to file. And that is once a year at the end of the year. Obviously, you can't report it in December. So by January 30th, you need to be telling the IRS what the year before looked like as far as what you paid employees and what those unemployment taxes are, and making sure that you're paying those by January 30th.
Yeah, so you have the the quarterly reports, and and those are, this is where you start needing the help of an accountant, or at least the guidance of an accountant, because we get to see a lot of folks who come in and say, hey, I got all these letters from the IRS, and the letters are saying, hey, where's my money? Where you have 3-4 employees, where's the money, right? Where's the money? And they think, hey, oh, I thought I had to do this quarterly. Well, yeah, the reports do quarterly, right? The money is due, and they'll send you a letter. They'll send you a letter saying, hey, we have determined that your frequency should be this, right? And then, of course, the 940, you file and pay the unemployment part of the federal, you file and pay at the end of the year.
Okay.
So when it comes to income taxes, so we just talked about payroll taxes. Welcome to the life of a business owner, of a CEO, right? And you have to think about taxes, income taxes, payroll taxes, estimated taxes, state taxes, right? What a great business. And you'll understand that your responsibility, and when I mean your responsibility, is because you are the signing officer for these documents. The IRS doesn't care who your accountant is. They care that you own a business and that you need to comply, right? So who is the ultimate responsible for everything tax? Not your accountant, right? If you pay a good accountant, you will have a good accountant. If you have a responsible accountant, you'll have a great accountant. But you are the ultimate responsible. The IRS holds you ultimately responsible, you the CEO, you the company, for making sure that all of these reports are in. So let's talk about filing your taxes. And I'm going to do this briefly because most of you already filed your taxes, right? The May 15th, right, Christy? Which one? 15th?
May 15th.
May 15th is the due date, the last day that you can file your taxes, unless you are in Texas, right? And because of the storms, they extended that. So what are we going to talk about after the taxes are due, right? We're going to continue to talk about building the habits of having a successful tax year. In the number one step is to make sure that, on a weekly basis, at a very minimum, you're thinking about the finances of your business, right? So when you are going to file your taxes, right, that is going to, the way you file your taxes is going to be determined by the way you structure your company. If you are a corporation, or if you are an LLC, or if you are a partnership, right, that is going to have different implications in the way we file your taxes, in the way we build your accounting. All right. This is not a tax class. This is not this is not an accounting course. So I'm not going to go into all the details of that because they're boring. What you need to know is that if you are a C corporation, maybe Delaware established or Texas corporation, and you have shares and you have all of this, all of this cool stuff, right? Then what that means is that you are going to have more likely to file Form 1120 at the end of the year, right? For corporations, the same form that Amazon and Facebook and all the other corporations file. If you're an LLC, more likely you're doing, if you're doing it right and you're an LLC, more likely you're doing Form 1120S. And if you're a partnership, 1065, right? We're not going to get into Schedule C's here because this is for accounting for startups, right? For companies who have been legitimately registered, right? Through the state and with the IRS. But the things that you need to understand is that your legal structure determines what form we're going to file. And if you are most of our viewership is in Texas. So if you are a company who register in Delaware, right? So you are a Delaware corporation, but you operate in Texas, you got to make sure that you tell the state of Texas, right? The Texas Comptroller, the Secretary of State, They need to know that you are operating as a foreign entity in the state of Texas. Very important that you do that, because if you don't, they will let you know that they know you exist, and followed by penalties and other paperwork that you have to file, which is it's not pretty, right? So you think about the types of taxes that you have to pay and that you have to file. And remember, if you don't have profit with the federal tax authority, the IRS, if you don't have a profit, more likely you will not pay income tax, right? You won't. You can't. You cannot. Let me rephrase that. If you don't have a profit, you're not going to pay income tax. You cannot calculate income tax on negative numbers. All right. Now, with the state of Texas, there is something called franchise tax. Now, if you are below the $1.1 million in revenue, then more likely you are not going to have to pay any franchise tax, but you have to file the report. If you're a Delaware corporation, right, that the tax there, the franchise tax, is not based on revenue, right? It's not. We're going to talk about allocation of shares and other interesting, details there. So you have to be ready to pay at a very minimum a $400 fee to Delaware. If you're in the state of California, you have to be ready to pay that yearly $800 minimum. So it's all based on revenue, but there are minimums in the state of California and the state of Delaware. And then welcome to beautiful Texas. We don't have that minimum here. If you're under the $1.1 million in revenue threshold, then you file the report, but you don't have to pay any taxes. And the last thing I'll touch when it comes to taxes is estimated taxes. And not because you're going to have to do that right now, but because you need to understand that it will come to a point where the IRS will come to you and say, your revenue is too interesting now. You need to start paying me on a quarterly estimated basis. And what that means is that they're going to go back to last year and see what you did last year. They're going to tell you to go and pay your accountant to do that. And you're going to have to, estimate what your quarterly payments are. So what that does is it gives the IRS a level of security that you're going to pay your tax bill at the end of the year. So instead of paying, just to give you an example, instead of paying, $10,000 at the end of the year as your tax bill, you end up paying, probably
$2,500 per
$2,500,
quarter.
right? So you just break it up, right? And if it comes to a point where you overpay, well, they'll refund you some money, or you can credit it to other activities.
Yep.
What did I miss?
You didn't miss anything, but I think now, since we've talked about paying out money, we need to talk about how to save on some of those taxes so you're not paying so much out. And the big one is the R&D tax credit. And this one is really cool because you can take advantage of it even if you're not making yet any profit for your business. And just so you know, when you think about research and development, they're not talking about pharmaceutical type of companies, which, they qualify, but this can be if you're building any kind of innovative software, technology, hardware, healthcare, tech, any of those things that are innovative where you have a team of developers or research and developers working on your product, you qualify for this R&D tax credit. And the way the credit works is a lot of the expenses that you are spending on paying your researchers and developers and other qualified expenses, you can apply that to save money in your account, your bank account, by either offsetting your payroll taxes or your income taxes. But at the end of the day, the most important thing is that taxes that you would typically expect to pay, you don't have to pay it, because you can say, here's that credit that I had my accountant calculate, and I'm going to use that credit instead and keep this money in my bank account, which I can use to continue the operations or grow the business or expand my team. So the R&D tax credit's a really cool credit. Not every accountant does it, but if you don't have an accountant, find one that can help you with that credit, because you can save thousands and thousands of dollars with the R&D tax credit.
One of the reasons why some accountants don't do R&D tax credit is because, the claims is because they don't do payroll, right? And they, you see nowadays that, some founders, some companies will have payroll with this company, they're accounting with that company, right? And then a third company comes in and calculates the payroll, the calculations, right? So we are actually able to do it all through the process of accounting. So it's a seamless process. So through the process of accounting, we will not only understand your business, because we have to understand your business in order to create the claim and create it escapes my mind, Christy, create the research, right?
Yes, there's a case study that has to be done.
There you go. Yeah.
And, sorry.
So no, it's fine. So through the process of accounting, we get to learn your business, and we get to put together this case study. And also, because we know your payroll, we are able to know exactly where this, how much of it is applicable, right? And because we do your accounting and we do your taxes, we're able to submit the claim all in one place, right? Technology is beautiful, experience is more beautiful, and when we put them both together, right? So anyway, so you see other points here, such as the startup costs, right? I think this is something you have to understand and talk to, whoever your accountant is going to be, but how to properly deduct your startup cost, and also how to calculate depreciation on certain items. It all depends on each business, right? If you're just a software company, only a software company, and you don't have a lot of equipment, then this probably doesn't apply to you much. But there's also amortization on the cost of of patents and startup fees and things like that. So a lot of things that you need to take away from here, whether we become your accountants or or you go to someone else. You need to be asking, hey, talk to me about startup costs, talk to me about depreciation, talk to me about the best way to take advantage of the employee benefits deductions. And ultimately, right, one of the biggest reasons why you want to have all your accounting in order and have all your taxes in order, especially if you're losing money for the first 2-3 years. Maybe you're going to become the next Uber and you're going to lose money forever, right? Those carryover losses, there are some limitations to those losses, but you can carry those losses for a very long time. You carry them over, and the loss from this year can help you offset the taxes for future years. Just think about that. Make it so simple, right? Don't worry about the carryover loss title. Just think about it this way. The losses from this year can help me offset taxes in the future, right? There are some limitations. There are some there's some steps that you have to follow, right? Don't do this yourself, but you'll see that the reason why Amazon and other companies are able to come up with a very low or a zero tax bill at the end of the year. Not everybody can do that. I'm not telling you that you're going to do that all the time. But the reason is because there's planning throughout the year, right? This is not something that in February, March, or April, the Amazon accountants are like, oh my God, let's go file the taxes, right? No. They're planning this throughout the year, right? It's called tax planning, right? And and what happens is that you start taking some of these things under consideration, right? R&D tax credits, depreciation, employee benefits, carryover losses, and many other deductions and credits that you can add to the tax form, depending on what you do for business and the size of the business. So some very interesting things that you need to know, that you need to take away. Consult with an accountant. Don't do it yourself. If you want to grow your business, do it yourself. If you are in the infancy stage of the business, right? You got to designate the time. Remember the 3 main pillars of your business. And I can tell you this from the standpoint of a profitable company, from a standpoint of a company that has multiple employees, right? From a founder and from an accountant, I can tell you this. The 3 main pillars of your business: your sales, You can't grow your business. You can't survive without sales. Your clients, you can't survive without clients, right? And your finances, right? You can't do anything else without. You can't hire employees. You cannot give raises. You cannot do benefits. You cannot do any of all of that, right? Unless you take care of those three first, and then you start building the rest, right? So we want to leave you with these thoughts. Remember, if you have any questions, you can put them here in the comment section. Most of the questions come after people have watched this this episode or this live cast, and we just want to thank everybody for being here.
Yes, thank you so much. I want to leave you with some resources. We do offer free accounting consultations and tax consultations. I will drop links to schedule those here below the broadcast, or as soon as we end this broadcast, I'll throw those links there. Feel free to schedule it with our team. They'll be happy to provide any kind of guidance, direction. And then also, we talked about Jones-Kurtz law. If you are in need of a lawyer for your startup, definitely we recommend Kyle Kurtz with Jones-Kurtz, and there's their website. And follow us on social media. We're always giving tips for small businesses. You can find us on LinkedIn, Twitter, Facebook, Instagram as well. And again, thank you for your time. Josh, any last words?
No. Thank you so much. We'll see you next time.
Okay. Bye, y'all.
Bye.